Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. The S&P 500 and Nasdaq managed to set new highs. Ross takes a look at gold, silver, platinum, palladium, copper, and uranium. InsideTrackTrading.com President Eric Hadik examines the impact of cycles on the white metals, Bitcoin, the stock markets, and interest rates. Publisher of the Leibovit VR newsletters, Mark Leibovit, joins us from Arizona to chat about platinum, palladium, copper, gold, silver, lunar cycles, and Elon Musk's America Party. Author of the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash, Hilliard MacBeth, comments on the state of Canadian real estate, tariffs, electric vehicles, and Alberta independence. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Always good to be with you, Jim.
How did the stock markets do this week?
Well, it was continued upside bias until just at the tail end of the week, a bit of a hiccup. And in the middle of the week, we got a hiccup when there was the announcement of the 50% tariff on copper. So, that was good for one day down, and then the market recovered from that. But, overall, the S&P, the Nasdaq, all-time highs this week. The Dow is still not up there yet, but getting pretty darn close, just shy of 45,000. And it double topped back in November and January at 45,000. But at this point, trends are up. And if we take a look over at the credit markets, the high yields, the high yield bonds, the CCC bonds, trends there are supportive to the marketplace. And I look at the global M2, the money supply, and it shows that maybe there's a bit of a hiccup coming for the equity markets in the next 2 to 3 weeks. But overall, money supply, is growing at all-time highs, and that money's looking for places to go. Some of that's into equities. We know that the other beneficiaries have been over in things like Bitcoin and in precious metals. So an interesting time we're in right now. But, until we start to see some signs of markets rolling over, the trend is your friend on the upside right now.
What's going on with Bitcoin?
Bitcoin, we had a good sell-off into the about 3 weeks ago. It got down to 100,000, and we got some good oversold lows in there, just below 100,000, and now we've run all the way to new record highs at 118,000 as of today. So what do you got? An 18% run in 3 weeks. That's pretty darn impressive. It really gained momentum as it went through the highs, which had been around 110, 112,000. We'll see how it does here, but I think you want to be looking at that breakout level at 110 as a pretty important level to find support on pullbacks. You don't want to see it violate that, otherwise that would be a negative for the price action.
How's gold doing?
Gold is slowly working its way up. I mean, here we are. We continue basically to be in the trading range that it was established after we hit the $3,500 high back in April. we had some higher lows both in the second week of May and again about 10 days ago. So we got rising supports, but on the other side of the coin, we're still getting resistance levels. We've got the spot price around $33.50 as we are talking right now, and we say 3,500 was the high in April. The high that we put in during June was around 34.50. So lower highs, higher lows boxed in here. And considering that, what's been going on with the other precious metals, take a look at the silver market, which broke out to finally through its resistance levels. So as of today, we're looking at it trading at the highest levels since 2011. So we're just short of $40 as far as the silver price is concerned. There's some resistance lines that you could look at within channels that might show that there's resistance up here. However, if you take a look at the bigger patterns, you've got these big cup and handles coming back from. The biggest one comes back from the all-time highs, so that's on the monthly chart. And if you look at the weekly, you've got another cup and handle, and even on the daily, we've got a small cup and handle position. So you really want to make sure that this breakout we've had through 36 to 37 on silver holds its gains here. The other precious metals that we were looking at that had come to life, platinum and palladium, are really moving along very, very nicely at this point. And the stocks, there's very few of them to trade there, but the ones that do participate in that area of the marketplace are doing quite well. In contrast, when we take a look at over at the silver stocks, for all that silver is making this really good move, there's only 4 of the silver stock names that I look at: First Majestic, Mag Silver, Coeur d'Alene, and Silver Corp that have managed to move into new highs with the bullion price. So this is a limited rally right now, and we'll see how the other stocks, if they can manage to come to life.
What's happening with the U.S. and Canadian dollars?
U.S. dollar, we got some really good buy signals on that one 10 days ago. The weekly charts produced a significant low, say, on the weekly, also on the daily. When we were down at 97 on the index, 96.5 to 97. At that point, the pattern that we had, we'd seen maybe a dozen times in the last 25 years. What we needed to see was the first week with a higher high. That has happened this week. So we'd be looking for the index, which is, as of now is at 97.80, looking for that to get up to the 20-week moving average, which is just above par. So there's some running room on the upside for the dollar index. And typically when the dollar index comes off a low like this, you see the gold market put in an interim high. And of note, when you take a look at the fact that gold has managed to rally a bit this week, it is still, as I say, putting in lower highs. It hasn't had the momentum of the other precious metals. So this move in the dollar index is, putting a bit of a lid on gold, and that's not unexpected. So I would say you want to watch pretty closely how it holds on any move towards 32.50. If we break through that, could see a decent correction in gold that would be commensurate with the rally in the dollar index.
What's going on in the crude market?
Crude is, it's bouncing back reasonably here. We're looking at prices now up into the into the 68 range. So there's some slowly working its way back after the big hit following the bombing in Iran. And at this point, it's still got a seasonal upside bias. As I've said here in the last few weeks, I don't see a trade in there. It's been, from 65 up to 68. And I don't see that there's a lot on the upside that makes you want to jump at that one.
What's going on with copper since President Trump announced 50% tariffs on that?
Well, the initial reaction was so we've been having trouble getting through this 5 to 510 range, which historically is a pretty big resistance. So the evening of the announcement, prices popped all the way to 580, which is not the 50% move of a tariff. It's far less than that, but it did create a big blip on the upside. Once again, the tariff is on foreign, producers bringing product in, and the fact is that everybody's going to push pretty fast right now to get the product into a U.S. port, whether that's Puerto Rico or anywhere else, just to have it on U.S. ground. The stocks, the mining stocks, notably got hit right off the bat. There just aren't many producers inside the U.S. All the production is elsewhere. So for all that it looked like copper was a great trade on the upside, the move has really been in the metal itself, not in the stocks. We'll see how the stocks manage to hold here in the next week or two. The other big one that has happened along here has been the move in the correction in the uranium stocks. Very happy to see this, and we've got some nice oversold readings the middle of this week, so it looks as though uranium might be setting up for its next run on the upside. And corrections like this have become historically good buying opportunities. So I hope people take advantage of it. Don't risk, too much. But this looks like a pretty decent low is being put in right now.
Ross, thank you so much for the update.
You're welcome, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, Eric Hadik next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. He's speaking to us from Central California. Welcome back to This Week in Money.
Thanks for having me back, Jim. Pleasure to be here.
Can you tell us about Inside Track, spelled with 2 I's, and how our listeners can subscribe?
Yes, Inside Track is a technical and cyclically based research and advisory service. We provide different publications that are available via subscription, as well as many special reports and other articles, technical training manual, and it can all be accessed or learned more about at our primary website, InsideTrackTrading.com, and that is inside with 2 I's, so it's INSIIDE, tracktrading.com.
Let's start off with platinum and palladium and where they are in their cycles.
Well, I continue to stress that all of my work was showing the white metals, silver, platinum, and palladium, would experience major bull markets between early April of 2025 and April/May of 2026. And there was a number of technical indicators as well as cyclical, all showing that early April should be a very dramatic turnaround in those metals, and that they should see some accelerated advances into this time period, late July, and then ultimately late October, early November. So we are right in the midst of that. Platinum completely took off when it was trading down there a little below 900. I discussed how the minimum upside target was 1,500, and that we'd probably see much higher levels than that. We are now approaching that, have been bumping up against 1,450 lately, and could probably see another spike up in the second half of July, leading into a multi-week peak, perhaps as much as a 1 to 2 month peak. But that is all part of a broader advance in those white metals. You had palladium kind of slow to catch on, but then in mid-May and then again in early June, it triggered a series of intermediate buy signals that were described in our publications. I did a 5-week series of inter-week alerts that focused on platinum, palladium, and to a lesser extent silver, and why they should see these big surges. And so those buy signals triggered in, and now palladium has been playing a little catch-up with platinum, but I really need to see palladium give a weekly close above 1230 to show that it's breaking out of a 1 to 2 year bottoming range and really starting to take off in a more defined bull market. And at the same time, you've got silver that has been on track since early April to rally up to $39 to $40 an ounce. That remains my upside target. And there's some signals shaping up this week that are honing not only that price objective, but the likely timing for it to happen. So you've got all the white metals in very strong advances, but expected to culminate these initial advances in the coming weeks, probably sometime after July 11th, 14th. That's Friday, Monday, but maybe stretching into the week of July 21st to the 25th, when you've got a little bit greater synergy of cycles coming into play.
President Trump's ending a number of wars all over the world, plus working on solutions for Iran, Israel, and Russia, Ukraine. Could President Trump's work cause a change in the war cycles?
I would say exactly the opposite. I think that all of the things happening in these months and coincidence and causality. Some of them are directly a result of things he's done or said. Some of them are just a continuation of what's been building up for a couple of years. But for 5 to 7 years leading into this phase of the war cycle, and that began in late 2021, I've been saying all along, and these cycles have been showing all along, that the second half of 2025 would be when we would be most likely to see a culmination of those cycles. So bringing a lot of them, we've really seen more activity and more conflict in the last few months. So whether they come to an end or not remains to be seen, but it's almost like if you had a row of houses and one was on fire and you're trying to figure out the best way to get the fire out, and you bring in a big incendiary device and blow out the other 9 houses, and then you say, okay, fire's done burning, there's nothing left to burn. That would be the culmination of that fire, and I think we're kind of seeing that with these war cycles, that they're into a crescendo where certainly at some point it will probably lead to a cessation of the conflict. But even in recent days, you've had Israel turned their sights on the Houthis in Yemen and start attacking there. So that whole situation is certainly not completed, and Israel is going to decide when it's best for Israel to stop that, whether you want to call it preemptive, reactionary, retaliatory. It's got little to do with what's happening over here in America. So it'll be interesting to see what Israel's end game is there. But this is actually a perfect confirmation and validation of those war cycles. I even remember you and I talking about it back in the mid and later 20-teens when you had some of the North Korean stuff going on, and you'd often ask me in some of these interviews, is this the onset of the war cycles you've been discussing? And every time I'd say no. The war cycles that I am looking at, this 80-year cycle of war that dates back to the 1200s that I've documented, it was all showing that it should really take hold between late 2021 and late 2025. And late 2021 is exactly when all of a sudden this massive troop buildup on the border of Ukraine started. I believe it was November of 2021. And the war cycles just took hold from there and have been accelerating ever since. In the middle of that war cycle, I did a series of articles in 2022 that reinforced why Middle East war cycles should really take hold and explode in late 2023, linked to just a dozen or so other events, including what had happened in 1973, exactly 50 years earlier. And so all of my work then was saying to look at October of 2023 for the kind of explosion of Middle East war cycles, and that's exactly when you had Hamas going into Israel with the attack that really triggered what we've seen the last 18 to 24 months. So it's all very much in sync with these cycles, and the second half of 2025 is when they culminate. And so 90-10 rule of cycles tells you to look for a crescendo and acceleration leading into that, just as 1945 was the end of World War II. It was also some of the most dramatic events in World War II. So this is far more of validation and fulfillment than it is anything that would negate the culmination of those war cycles.
The S&P 500 and Nasdaq hit new all-time highs this month. Do the S&P 500 and the Nasdaq follow the same cycles?
They are much closer in sync and have been for many years. The two of them move in closer tandem. And then at the other end of the spectrum, you've got the Russell 2000 and S&P Mid-Cap adhering to their own cycles and technicals, which when you've got a big up move or big down move, they're all moving in sync. But when you start to get into trading ranges, that's when you see the distinction and delineation between those diverse cycles. But you definitely have the S&P 500 and the Nasdaq 100 showing the most strength in most of these moves. And ever since early April, they've been saying that they needed to, as well as the Dow Industrials, needed to rally back and see new highs, even though everything was looking kind of dire at that time. The technicals were saying that they had to retest those highs and or spike above them. And so that has been the focus for the last 3 months in our publications, that those stock indexes would head back up to their highs. But the second half of July is also a critical time in those stock indexes. So I could certainly see at least a 1 to 2 month top take hold in the coming weeks. And there are some specific patterns and indicators that I'm waiting to see unfold and ultimately be triggered in order to signal that that top is taking hold.
Gold is still off its all-time high in April. Has the gold cycle peaked?
On a multi-month basis, it certainly did in late April. That particular combination of cycles, there were actually several that were detailed in our weekly relay publications in the month leading into late April. But gold has adhered to a very consistent 3-month, which is kind of a 90-degree, if you treat the year as a circle and a cycle, but a 90-degree move, a 6-month, 180-degree cycle or move, and a full year 360-degree cycle. All of them were showing that the next important peak in gold after its late October 2024 peak should be in late April, early May, and then as we got closer to that time frame, several technical indicators were honing it and saying that late April should be at least a 2 to 3 month peak. So gold is definitely adhering to that, but it has also maintained a bullish technical structure and pattern. So just because a high was set doesn't mean that any sort of major bear market is taking hold, just that the upcycle was maturing, needed some time to mark some time and set a higher plateau. But right now, gold is still giving some bullish signs that say it could see a rally above those late April highs in the coming weeks. And on a little bit broader perspective, my outlook is still that late October, early November of this year, 2025, would mark the next important peak in gold.
Silver's been trading sideways within a range for the past month. What is the silver cycle showing for the rest of 2025 and 26?
Well, just as I mentioned with the white metals, silver has been in a much more bullish structure. In fact, the irony there is that, many silver cycles, multi-month cycles, bottomed in early April, and it just began a bull market. And within 3 weeks of that, multi-month cycles were peaking in gold. And so we've had silver really be the leader to the upside throughout this last 3-month period. But this sideways pattern you're referring to, for me, has just been a wave 4 on a 3 to 6 month basis. And my work is showing that silver needs to rally back up, get back above 37, then 37.50. And I think we'll see that in the coming days and or weeks. And silver still targeting a rally to 39.50 to a little bit above 40, say 40.10, 40.10 in the September silver futures. So that's the primary target range that I'm looking at. And depending on how we approach that area, that could even time a very significant top. But for right now, it's an upside target, which does not automatically mean it's the exact top. That's just where many of your bullish indicators are saying the market should reach. And then, again, it's up to price action to show whether there's going to be some follow-through, some acceleration above that level, or if that is going to play out as a pretty important peak. But that's in the context of my broader silver outlook, which I discussed a little earlier when we were talking about platinum and palladium. But a lot of my work was and still is showing that early April would be the start of a 6 to 12 month bull market in silver and the white metals. So I think that on balance, we certainly have a lot more upside. And when I say on balance, it doesn't mean that silver goes straight up for that entire time, but that when it's all said and done, that period of time. In fact, right now I'm still focused on April, May of 2026. That could and should mark the highest point of this advance. How the market, how silver gets into that high point, that's for a lot of other technical indicators to discern and reveal along the way.
The U.S. dollar's been moving off an early July bottom. Where is the U.S. dollar in its cycle?
I still contend and am still really viewing it under the outlook that the dollar would see a sharp decline from January 2025 into late 2025, ideally into November. That's when the greatest synergy of cycles right now aligns. But as we get closer to that time frame, weekly and daily action should kind of hone that to a more specific time frame. But that's been my overall outlook in the dollar, and that is still what I expect. I do think we're going to see a bounce here in the probably second half of July or first part of August, but then I still expect to see another down wave into that November time frame.
The Canadian dollar's been trading sideways within a range for the past month. Is the Canadian dollar cycle the inverse of the U.S. dollar cycle?
I don't see it as completely inverse. There are times when that is certainly the case, but it has not been as consistent of an inverse cycle as some of your European currencies. Certainly this year, the Canadian dollar has traded in opposition to the dollar, and the Canadian dollar is getting up to some pretty critical resistance at the 74 to 75 cent level. So I wouldn't be surprised to see a peak take hold around that resistance and see some consolidation between there and maybe pulling back to about 72 in the weeks that follow.
Since we last spoke, crude's had a volatile month. Where is the crude oil cycle likely to go from here?
Crude oil has, as you mentioned, has been very volatile, and yet it has stayed in a very kind of clearly defined range. During its surge in late June, it went right back up to where it peaked in July of last year, in April of last year, in September and October of 2023, always right around the $75 to $76 a barrel level, and I'm looking at the September crude futures. So it remains kind of stuck in that trading range with some key cycles in late July, early August, but I expect to see a lot more of this volatile range trading in the energy markets.
Bitcoin's flirting with its all-time highs from May. Are we likely to see new highs in Bitcoin or a significant drop?
I think it's certainly likely, based on the momentum, based on technical indicators that did not turn negative during the latest pullback, that Bitcoin will see new highs, but it is still banging right up against that 3 to 6 month upside target that I've discussed before in some of our discussions, but right between 112 and 115, 112,000, 115,000, that's a key level for me because it has consolidated for these couple of months after initially testing 112. It might be in a position to blow through that 115 level. Really, the next key level after that would be right around 125,000. So the action of this week should help clarify how likely we are to see some acceleration up to that right now, or if that's going to wait for a future move in Bitcoin.
President Trump wants lower interest rates. Looking at the interest rate cycle, is he likely to get lower rates?
I think he will probably get some of those lower rates, but the rally in bonds and notes has really struggled with the recent action. They pulled back and gave some technical indications that a new rally in bonds, which would be, since they are trade inverse to the interest rates, that would mean a dip in interest rates, that is a growing possibility, but it's certainly slow going, and I think Powell and several at the Fed have already kind of shown part of their hands that late July is a lower likelihood of a rate cut, but after that you might see something. And I think that it's also one of those things of be careful what you wish for, you might just get it, because what would bring about lower interest rates would probably be more convincing signs that things are slowing and in the economy, and that perhaps tariffs are having a suppressing effect on economic activity. And so those lower interest rates might come, but it might be as a result of some not so great news in the economy.
Does the lithium ETF LIT look bullish?
The lithium, the LIT ETF trades much more like a stock as opposed to the actual price of lithium. The price of lithium continues to head lower, but the LIT ETF is very consistent and kind of methodical in its movement. Really, for a year or two, it has shown a very consistent range trading between about 47 on the upside and 35 on the downside. That high side, that 47 level, was initially set when the LIT was dropping into late 2023 and found initial support there. And then once you break under a level like that, it becomes ongoing resistance. And so ever since March of 2024, again in October, we've seen the LIT find resistance right up around 47, and it dropped down into late September, found support at 35, rebounded back up to 47, and a lot of times with a range trading market like that, if it holds the high end, it'll go back to the low end, which is exactly what you saw leading into late March, early April. Again, trading just like the stock market as opposed to trading like lithium itself. And it gave some positive signs down there that show it could go back up to that $47 resistance level. But on a broader perspective, it remains in just consolidation down in that lower quadrant of its multi-year price range.
Home sales seem to be drying up in Canada and the U.S. Do home sales have a cycle?
They definitely do, but when you have to factor in all the different regions and a lot of other anomalies or distinctions between different areas of the country, it's harder to really pinpoint intermediate cycles. And so I look at them more from a very broad picture, broad stroke perspective, also dealing with interest rates, dealing with economic numbers. And about a year and a half ago, I was discussing what the Home Affordability Index and a couple of other related real estate price factors and cycles, and showing how I thought at the time, late 2023 was marking a very important peak in those cycles. Now that could be retested as a topping phase goes on, but that continues to play out. And so I do think you've been in a topping phase, and with interest rates not budging Sooner or later, something is going to have to budge. And if it's not the interest rates, then the only thing left is the price of the home to start heading down in order to try and attract buyers. And I think you've got a lot of homeowners that came in on the last few years, running in as prices were going up and rates were going up because they didn't want to miss the boat. And, you may start getting a situation where some of them are struggling to keep up with things, and you just get that slow, gradual topping and starting to turn down that then at some point in the future has some other factors that impact it and start to accelerate it. But it definitely appears to be in that sort of topping phase. But again, that type of thing can stretch out for quite a while until there's some sort of more significant event that gets a new trend moving.
July 10th, there was a full moon called a buck moon. Do some lunar cycles mean more than others?
I bet they probably do to all the lunar watchers, but either I just wasn't aware of it, or it's kind of like holidays when some lobby hits Congress every week and wants a new holiday every day of the year. I've never heard of so many different moons, but they must have always had these names. They just were never very emphasized or focused on. I don't know that there are any that are more significant than others. Early on in my trading career, I did give some attention to lunar cycles and lunar solar eclipses, and really wasn't able to find enough of a consistency and clarity where, you could actually attribute something a little more specific market-wise to those events. So that's one of those things that I don't really monitor anymore and or discuss. So I don't know how important the buck cycle is. I don't know if, everything stops with the buck or the buck stops here, but or where it is in the hierarchy of lunar cycles. You'd have to ask someone else about that.
Where can our listeners subscribe to Inside Track with two eyes?
They can come to our primary website at InsideTrackTrading.com. Again, that's inside with the extra I in the middle, so it's INSIIDE, tracktrading.com.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and president of InsideTrackTrading.com. Coming up, Mark Leibovit, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona, where I see in Phoenix it was 118 degrees Fahrenheit, 48 Celsius the other day.
It's time of year. This is what happens. I remember... this has got to go back about 20 years. I was out looking for a car at a parking lot somewhere in southern Phoenix, and I think it hit 123 when I was out there, stupid as I was being there at the time. And that was the day, it's happened since, that apparently they shut down Sky Harbor Airport because, as you know, with your aviation background, some planes can't achieve lift when the heat is that high, so they ground some planes. So I don't know if that's happening now or will happen again, but it has happened a couple of times. So that's the trade-off for having, as they say, it's a valley of the sun. What you get during the summer is what you ask for. I suppose.
Well, if it's a Boeing, the doors will fall off, so you'll have plenty of ventilation.
I suppose that would also happen. But yeah. Listen, I used to work in Chicago many years ago, and I used to work on LaSalle Street and at the Board of Trade area, Chicago Board Options Exchange. So, there were days where we had 80 below wind chill. And I was there about 13 years. Not every winter experienced that, but got pretty close. So, it's like anything else. You don't stand out in 80 below wind chill for any length of time, just like you don't stand out at 118 degrees Fahrenheit here in Phoenix. So this is why they invented air conditioning and heating, I suppose.
Taking a look at the metals markets, what's going on with platinum and palladium?
Well, they're taking off to the upside. We've had them on the list on and off, and we're currently have them on our buy list. It's a catch-up play, if nothing else, but, the whole search for rare earth metals and other metals, including copper, which I think we're going to discuss in a moment, is a demand for metals with regard to the technology needs, and whether it's because of the nuclear program or the AI demands for energy, or the shortages that might be occurring because, as you know, in the case at least of the rare earths, China controlled the supply. And just this past week, we saw a company, MP Metals, make a deal with the U.S. government to generate or to seek out magnets that the government and the industry needs. And stock exploded to the upside. So a lot of interest in the metals in general, stretching from copper, to magnets, to platinum, to palladium. The perceived or real shortages are out there. And if you look at the charts of platinum and palladium historically, they're extremely cheap here. I mean, they've hardly even started their moves. So, I can pull up a chart of, palladium here just to give you, a rough idea. I think it's traded around $111 an ounce or so today. Going back a couple, 3 years, it was 296. And if you look at platinum, which historically used to trade at a premium to gold, and it completely reversed as gold took off. Well, I'm looking at platinum at $1,800 an ounce a few years ago, and now it's $128 an ounce. I mean, it's got to be the biggest bargains on the planet, or just a technical catch-up play in terms of, where they could, not to say they're going back to those high levels that I just quoted, but there seems to be room on the upside. So follow the market. The market's saying they want to go up.
President Trump is talking about putting 50% tariffs on copper. Copper then hit a new all-time high with that news. Long term, is this bullish for copper?
Well, a 50% copper on copper imports in the U.S. is bearish for global copper prices, but bullish for domestic copper prices, at least over the near term. So basically, a significant tariff like 50% makes imported copper more expensive in the U.S., potentially leading to reduced demand from U.S. buyers, but this could result in a surplus of copper outside the U.S., weighing in on the LME copper prices. So it's bullish for domestic prices. The tariff makes imported copper significantly more expensive, encouraging U.S. buyers to source it domestically. So it's good for companies like Freeport McMoran, which is based here in Arizona, and of course part of their holdings is also in the gold market. So I would say domestic copper, it's good for business.
Does gold look like it's put in a top?
I'm afraid to call a top in gold. So much of it is geopolitical. The big surge began when Hamas invaded Israel, and before that, the Ukrainian war started with Putin, and it seems that those are the actions that trigger the move in gold. And just recently, last few days, Putin and Trump apparently didn't have, or they had a good conversation, but apparently Putin decided to drop some more bombs on Ukraine, and Trump's not too happy with Putin doing that. Putin's got his own reasons. So there's still, geopolitical risk out there. And, Israel's threatening that it can still bomb Iran if Iran doesn't comply. Apparently they're not buddy-buddy on, settling the dispute regarding their nuclear power demands and nuclear bomb desires. There's a lot of stuff going on. We read and heard that, North Korea sent troops into the Ukraine. Everybody's getting in the way of, a peace discussion here. So you've got between North Korea, China, of course, has its interest in getting the crude oil out of the Mideast, so the Iran didn't block the Straits of Hormuz. We know that. So, it's just too much unsettling factors out there. And then we've got a whole other story going with, potential change of the Federal Reserve chairman here in the U.S. It's not being discussed, but one of the candidates that I thought might be considered as a big gold bug. There's a lot of talk about tying Treasury bonds to gold. And the big story, which is not really talked about, is the cover-up, I think, which exists with regard to Fort Knox. When this whole thing started a few months ago, Elon Musk, excited. And I don't know if Donald Trump had talked about it as well, that we have to go in and audit the Fort Knox to see if the gold's really there. And that just sort of quieted down and disappeared. And, it's just intuition on my part, a little common sense, I think. The fact that it's not openly being audited and shown to the world says to me that it's been lost or stolen or spent, and it may not be there. And that possibility, it could keep gold high for a long time. If they opened every vault and showed every ounce of gold in there and cleared the air, I'm not saying gold's going to collapse, but that would help take some of that bullish pressure off of it. But just think for a second, if the gold's not there or a small fraction is left, what could happen to gold prices? You can make up any number you like. So it's crazy what's going on. So I'm not calling for a top yet. That's the answer to your question.
Is silver looking bullish still?
It's not looking, it's acting bullish. It's breaking out every day. It's moving up. So it's a catch-up play at the very least. So all the silver bulls are excited, Jim, and I think, good shot at going to $40 an ounce U.S. It's already around the mid-30s now, and 50, and who knows, sky's the limit. And just in sympathy with what's going on with platinum and palladium and rare earths and, the whole push toward, owning up physical assets. It's big. And, there's also, the bearish viewpoint that if, civil unrest expands and you can't access your money for some reason, or banks are shut down, people think, well, how are they going to, what kind of medium of exchange are they going to have? This is sort of real bearish doom and gloom scenario. So silver coins people would accept for compensation, and it's nice to have a bunch of silver around. It's not as expensive as gold, and very few people understand what a gold coin is worth, but if you hand them a silver dollar, they know what that's worth. So silver has that fundamental desire on the part of not only collectors but common sense people. And we know from a historical point of view, silver, like gold, like copper, like all the metals, but particularly silver, has been around for thousands of years, has been used as a medium of exchange, and the common man understands it. So the answer to your question, yes, bullish.
Crude has had big volatility over the past month. What are your thoughts on oil?
I'm sort of on the fence here with crude oil. I was bearish for a while. It came down, and then suddenly, we had a little spike, when the Mideast things start to flare up, and then it's pulled back again. It just seems to me it's a geopolitical call. If something happens here tomorrow morning, it can explode again. The production that Donald Trump is encouraging here in the U.S., the fact that the U.S. is self-sufficient and is now an exporter of energy and has tremendous greater resources there, says to me prices really shouldn't go much higher if we've got all this supply around. Of course, Saudi Arabia, keeps pushing for higher prices. So I don't know. It's a call based on the geopolitical. I think ultimately, other things being equal, if you got infinite supply coming online, which has been held back for years, that would be a depressant on prices. So I think in the absence of some dramatic geopolitical event, I don't think crude oil should really go anywhere. So let's see what happens. You can trade it in the meantime, I suppose, up and down, back and forth between $60 and $80 a barrel and see what happens. Right now, we're sort of neutral on it.
Do you follow the lithium and battery metals markets?
I follow the ETFs for lithium, and for the most part, the ETF for lithium has been recovering. It had a big sell-off into April with the rest of the market, and now it's sort of been upticking a little bit. So despite what happened with Elon Musk and Donald Trump and so forth, they're still producing electric vehicles, and the demand still seems to be there. There's still orders. There's all this discussion how big the market is and whether it continue or not. But the demand is still there for them, for people that can afford it, and you need lithium for that. Of course, there's other reasons for lithium as well, but the chart says it's been improving. So anyway, we also could just throw it in the bucket of all the rare earth metals and all the other metals that we were just talking about. It's just another metal. It's like uranium as well. So if it's a physical commodity like lithium, like uranium, like gold, silver, platinum, palladium, and so forth, you want to own it, because this seems to be the time that the markets want these commodities.
Is the Bitcoin chart looking bullish or bearish?
Boy, is that an understatement. It broke out the new all-time highs today, Jim. I don't have the exact number here, just under $118,000 for Bitcoin. And you know that I've been a bull on it for a long time, and we have it on our list. So decidedly bullish, decidedly going much higher. You just got to have your belt tightened and your crash helmet on, your seatbelt on, because, it's a volatile market. So I'm a bull.
Is crypto week in honor of believers and greater fools that think cryptos have intrinsic value?
It makes no difference. It's what the market will pay. Does the U.S. dollar or the Canadian dollar that you use for exchange in the grocery store or in your bank account have any intrinsic value? And the answer is no. It's based on the full faith and credit of the Canadian government or the U.S. government that they'll exchange that for other dollars, and it's worth the dollar that they say it's worth, even though there's nothing behind it. So, many feel that the paper currency that we use is worthless, but we still use it because the government says it's legitimate currency. And so the answer is, if people feel that crypto is a medium of exchange, and you can use Bitcoin and other cryptos in exchange for goods and services, the answer that is, it's incorrect to assume that you say is a fact. Fact is that it is being accepted, and now we have major legislation underway in the U.S. Congress and Senate. We talked about this in the previous interviews. The Genius Act is in process, has to be confirmed by both houses. There's another act called the Clarity Act, apparently coming up this week in discussion in the House of Representatives here. It all has to do with bipartisan bills trying to establish a regulatory framework for digital assets, because there really hasn't been up to this point. So that's one of the reasons Bitcoin took off, and several of the other cryptos rallied big this week. The best phrase I can say about this is the party is just beginning, and there's more coming. And like anything else, it'll get overdone at some point in terms of pricing. But the whole point of the congressional actions is to make the crypto, altcoins or anything other than Bitcoin. That's just this definition. Like you'll hear the term altcoin being mentioned. And then you got the stable coins, which the Genius Act approved, which means that a company like Walmart, for example, can create its own coin, and you can use that for currency to buy and sell products, and you don't have to use a bank account or use a credit card. It's another whole other system of exchange, and the congressional actions are legitimatizing this to happen. So many big companies and others will start using stable coins, which is another form of crypto, of course. And it's just a growing area. I don't know how else to describe it. It's well over my head in terms of trying to grasp everything that could happen here going forward. But we know that Donald Trump, wanted to create a Bitcoin reserve here in the U.S. Apparently, a lot of Bitcoin has been confiscated by the government, and they're sitting on billions of dollars of Bitcoin. And they wanted to create another reserve for other cryptos. And so long as the government is behind it, supporting it, which is the opposite of what Joe Biden and his whole group was trying to do, they're trying to dismantle the whole thing. And the Securities and Exchange Commission under Gary Gensler was against it, and he's gone. So the whole regulatory framework is pro-crypto, and I'm not saying Bitcoin is the only thing that you can be in. I mean, you buy ETFs, and there are a lot of ways of playing it. You don't have to pay $118,000 for a coin. You can buy an ETF that trades a fraction of that, and have it as part of your portfolio if you want to participate. But there are a lot of individual coins out there, so it's a bit of a sales pitch. But I would encourage everyone to sign up go to vrtrader.com and go and sign up for our blockchain letter, which is just another term for the crypto letter. And, we have a weekly report, and you see the list of all the cryptos and our commentary there. And we try to put a little news about what's going on with the Genius Act and with the Digital Act that's now, being considered. And it's called the Clarity Act, actually, not the Digital Act. And learn more about it and see what we like. But anyway, bottom line is bullish.
Are cryptos more for trading and not holding long term?
Both. There's no reason to assume that they are for only trading. You can trade them. Look at Bitcoin, for example. I mean, look at it just in the last few weeks. Went from about 89,000 to 118,000. It's got to be within 30 days. So if you traded it, you did very well. In the meantime, if you didn't want to trade it and you use it as a medium of exchange, that's also good. There's nothing to say that this is a bubble that's going to burst and it's gone. I don't believe that right now, not at all. Now with congressional actions legitimatizing and making these into law. So it's even silly to think otherwise. You'd have to assume all these acts are revoked, the government collapses, and there's nothing, no support at all for any type of currency to assume that these won't have some value. Now, it doesn't mean they won't go up in price and come down in price, and there's going to be volatility. We've seen that already in the last few years. So you got to put your pants on and assume the risk.
Home sales are slowing in Canada and the U.S. Is that a red flag that says recession ahead?
Well, since last fall, I was warning about a recession. And one of the things that I was thinking about that made sense to me is the government laying off a lot of people, particularly with Donald Trump cutting back on government employees and stuff. There's, and so much of the government employment figures that we've read about were a result of government spending, hiring government employees. So the hiring wasn't not in the private sector as much as it was in the government, and that distorted the numbers. So when we start cutting back on government employees, there's less money around, and they lose jobs, and that helps contribute to a recessionary type environment. There are millions of government employees out there. If they're not working anymore, that certainly doesn't help the economy. So the answer is yes, but the question is, how is it temporary? Will these people find other work? A lot has to do with interest rates right now, the ability to borrow money, both for the corporate level and on the personal level. And there's a lot of negative sentiment out there, which I view as bullish, because when people get too bearish or bullish on any extreme, it's usually just the opposite happening. So I see, I'm looking at, for example, the home building stocks or the stocks related to the construction industry, and I'm starting to see accumulation in that. So some of the smart money is starting to think they were going to come out of the recession and home building and construction is going to improve because rates are going to come down one way or another. Now, whether Donald Trump fires Jay Powell, which he probably should do, but it would create a lot of political, backlash. We know he's going to be kicked out by next year, and that means, rates are going to come down on the Fed funds level. And of course, as you know, we've talked about this many times, Jim, we want to watch what the bond market is doing, because there's the old tail wagging the dog. Look at the 30-year bond, the 20-year bond, and if the bond market starts to rally, it was up to about 5-6 days ago. Now it's pulled back a little bit because everybody got depressed that this Fed meeting coming up. I think the next week or two, there's not going to be any rate cut. But the T-bond market, you got to watch that. If that rallies, that means the real free market is telling you that rates need to come down. So we just got to watch it carefully. We have a Fed meeting coming up, I think, in about a week. So nobody's expecting any rate cut. And Powell, just to spite Donald Trump, would probably not lower it anyway. But he's really been inept. And, my whole case has been for the longest time, it's not so much Jay Powell or Alan Greenspan or any of the former chairmen. It's the institution itself, which is corrupt in the sense of the poor advisors, misunderstanding of economics and the markets and the free market, and mistimed in so many things that the Fed has done. So the institution, we need an enema for the institution. We either have to get rid of it or completely revamp it in some way, maybe tie its actions to the free market, not to an independent agency, which is misrun. So, long-winded response to your question, but I got off on this tangent a bit. I think bottom line is rates will come down, whether it's the bond market telling us it's going to happen, or whether we're going to get the Fed chairman kicked out, or whether we're going to see a redo of the Federal Reserve itself. So that's all going to be bullish for stocks, for home prices, for real estate, and so forth. But it may take, within the next 12 months for all of us to work through this.
Do you think President Trump will be able to get the money supply under control?
Well, I don't think Trump has anything to do with it other than putting someone else in charge of the Federal Reserve, and he's pushing. The money supply is pretty much controlled by the Fed, and I guess you can say to a certain extent the U.S. Treasury. So, until they get the Fed under control here in terms of what he feels they should be doing in terms of interest rates, but see, the Fed also controls the money supply, not just the rates. It's the M2 money supply numbers and stuff. You have to do a little homework on this. But the truth is, the charts that I've been seeing in the last year or so have actually said the money supply has been increasing, which is positive if you want to see a growing economy. So despite the fact the Fed has kept interest rates high and they really haven't come down on the Fed funds rate, the charts say they've kept money relatively loose in terms of the M2 money supply. So I don't know where this question really needs to go. I don't know whether President Trump is looking to control and reduce the money supply. I don't think so, because that would be bad for the economy. You want to keep money supply growing, so I think I don't have much else to say about it. I would say controlling rates and as long as the Fed doesn't change its money supply progress, we're okay. If they start to really tighten money supply, that's where you get your serious recessions and contractions. By bringing rates up doesn't always do that. I think Paul Volcker, back in 1980, pulled back the money supply and drove interest rates up, and that's really what caused everything to contract. So we have to watch the M2 money supply to see what that's doing.
The Prime Minister of Israel, Benjamin Netanyahu, is nominating President Trump to receive the Nobel Peace Prize. Trump's already ended a number of wars by setting up trade deals. He's still working on Israel, Iran, and Russia, Ukraine. Geopolitically, what do you see ahead?
Well, I think, if I'm not mistaken, didn't the country of Pakistan recommend that Donald Trump received the Nobel Peace Prize in the last few weeks. I think that story came out. I'm not against that. I think definitely he's done more to try to bring peace than most other or all other presidents. He brought the U.S. Embassy into Jerusalem. He created the Abraham Accords. A lot of Mideastern countries have joined that and wish to join that. So obviously we haven't solved the Hamas-Israeli war situation and what's going to happen with Gaza when that's all done, though there has been discussion that he wants to turn that into a resort area along the Mediterranean and keep it under either neutral or Israeli control. He has not been successful so far with Ukraine-Russia, though he's doing a lot of talking on that one. There has been progress with Iran. We'll see how far that goes. So I have to remain optimistic because you have a fellow President Trump who's an active negotiator and peacemaker out there trying to settle down conflicts around the world. So I think he is entitled to a peace prize, at least in terms of his efforts. And time will tell. But I'm definitely before that. I mean, they gave the Nobel Peace Prize to Obama, who least deserved it than anyone, particularly since he funded the Iran and ultimately resulted in a lot of the conflicts that have unfolded since. So if someone as unscrupulous and inept as Obama can receive a Nobel Peace Prize, certainly Donald Trump's entitled to it.
Thursday this week, there was a full moon, a buck moon. What's the latest on geocosmics and lunar cycles?
Yeah, I've been looking at the moon every night. It's funny that Bitcoin took off right at the full moon. It's just a cycle that's up there, and market sort of got queasy here. Maybe part of the theory of looking at lunar cycles is that they suggest change of directions in the market. It could be short-term, could be near-term, but mostly short-term changes. So the fact the market rallied into the full moon this week and now sort of turned down a little bit. Of course, there was a story today about tariffs on Brazil and tariffs on Canada and things that shook up the market a little bit. It's all funny that it comes around the lunar cycle. So, those like myself who track this stuff would say, well, the moon was indicating a change of direction, possibly a little trading top here, maybe even for Bitcoin on a very short-term basis. Since it had a big move, maybe it pulls back for a few days now, and the stock market started to pull back a little bit. So you definitely got to pay attention to lunar cycles. I mean, literally no one, capital N-O-O-N-E, no one in the financial press, in the media, even mentions this subject. They've heard they're going to be thought of as, goofy or something. But if you study geologic and lunar history for thousands of years, you see correlations and the effect on the planet and our tides and human actions, particularly on full moons in the emergency rooms. So we know that there's a correlation. But, no, we have to talk about what presidents of companies are saying about their future of their companies, or what the balance sheets are saying, or what their earnings reports are going to be. But none of this has any correlation to the geocosmic. It's all just human-related control. And we found out that that's not the case, that we are affected by forces outside of our planet, and within our planet. So, yes, it definitely had a short-term effect here.
Could the deadly floods in the U.S. this week have been caused by geoengineering?
I did some research on this, and there have been a lot of secret activities on the part of the government for many, many years about cloud seeding, much of which officially has produced limited precipitation. There's no evidence yet that it was the cause of any large-scale disaster, even if they did some cloud seeding. We know there's a lot of, secret experiments that the government has conducted, and we've heard, through anecdotal stories and rumors for the years. We know there is geoengineering underway on certain levels. It's considered, a weapon, just like any other weapon that the government or military could use. So it's been developed for a long time. but most meteorologists and climate scientists dismiss that the cloud seeding, could be responsible for a weather event of this magnitude. But, maybe, we have to keep an open mind that maybe they're not aware of other technologies that exist out there. I'm going to discount it for now. But, there are those that believe other things in this whole subject matter, and this gets into the spiritual and the religious aspect of this. And there's a whole other video that I can post on my website that basically says that, this is just a biblical belief that sometimes God could be punishing us on a certain level for trying to break up lands that belong to Israel. And I know this sounds sort of left field, but there's always this video I'm going to post on my website basically saying it's God-given territory, and if there's any discussion. And there's a book that was written by a good friend of mine in years past called Eye to Eye, and his name is Bill Koenig, used to be a White House correspondent. And he documents that apparently when negotiations on the presidential level or the U.S. level compromise Israel's claim to its territory, for example, giving away lands that belong to Israel to Palestinians or to third parties they're supposedly God-given to Israel based on the Old Testament, not just in one person's view, that punishment comes out of that. So this is probably the last thing you'll hear in the media, but if you read the book Eye to Eye, and again, I can post a video on my website, it's obviously not going to appeal to many people who have their own political viewpoints about what should happen in the Mideast. But according to the biblical text, you could argue, and again, this is a very left field theory, but I've followed it over the number of years, and I've read dozens and dozens of accounts of how there were natural disasters in the U.S. following discussions or potential implementation of changes on the Israeli front on their territory. You wonder if God really is in control. You read these instances. You got to read the book. You got to watch the video, and it's not something again you'll hear in the press at all. But it's very interesting because when you see, a president make a certain statement, then 2 days later a giant typhoon or tornado tears through the U.S., and then they do the same thing 6 months later, and there's another disaster following some political statement regarding Israel. You wonder, is it all just coincidence, or is there some other power at force here? So you got to be a bit religious, obviously, to accept this. But when you brought up the engineering thought and cloud seeding, it immediately occurred to me there may be something totally left field that nobody would even want to talk about or think about that could be involved here. So I may be coming across that I'm super religious, but I'm just reading documents about statements that were made and the consequences that we saw unfold afterwards, and you wonder if there really is a correlation or not. So very interesting stuff. I'm always looking for new ideas and trying to investigate things that are not mainstream. So anyway, that's a long-winded response. I don't think it was necessarily engineering.
Do you like the idea of Elon Musk starting up the America Party, and could it eliminate the systemic corruption in the Democrat and Republican parties?
My personal view, it's a plan of action, just like the fight between supposed fight, or I guess you could say the real fight between Elon Musk and Donald Trump the past few weeks. It could be a political ploy of sorts to mess up the Democrats or confuse them, and they can be easily confused, in my opinion, because they've been so inept of what they've been doing and saying for many, many years. And the party itself, I think, except for a few good people, is basically corrupt. So I can see why Elon Musk would want to create another party, but it could be a strategy to help get the Democrats out of the way permanently on a certain level, and it could be just like the fight between him and Trump, and maybe there may be more to the story than just trying to create a political party because he disagrees on the amount of debt that the government has taken with the new big beautiful bill that was passed a few days ago. So I think it's a political ploy, and we'll see where it all goes. But it's coming from, I think, one of the greatest or if not the greatest living genius on the planet. And I got to give him credit that there's some method to the madness.
Where can our listeners follow you and subscribe to your newsletter?
Please go to vrtrader.com. That's Victor Robert, vrtrader.com. And when you go there, you'll see a nice picture of all our newsletters covering most of the major markets, including crypto and precious metals and everything else. You could choose your letter, and that's how you find me and get our reports, which are produced weekly. vrtrader.com.
Mark, thank you so much for being on This Week in Money.
Thank you for having me, Jim.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from America's Oven, Arizona. Coming up, Hilliard MacBeth, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBeth.McLeodPartners.com. He's speaking to us from Edmonton. Welcome back to This Week in Money.
It's always a pleasure to be on your show, Jim.
Your book, When the Bubble Bursts, is now on sale, the second edition of it. Where can people buy it?
They could buy it, a lot of people buy it on the Kindle or the Kobo or the other online ebook offerings, and also in the best bookstores all across Canada.
In your book, When the Bubble Bursts, after home sales dry up, what happens next?
Well, we're in that period now where there's very few transactions in places like Toronto and Vancouver. Of course, Edmonton and Calgary are exceptions. We can talk about that more if you want, but in the bigger centers, Edmonton and Toronto and Vancouver, there's just very little happening. There's large inventory. The buyers are afraid to buy because they see prices falling, and the sellers are reluctant to drop their prices. So you get a standoff. And that's basically what happens. And prices, sales dry up. Prices don't come down right away. And what I'm watching for, and I have been for quite a while now, is the lenders start to take action. So they go into foreclosure or power of sale. It's sometimes called either one, foreclosure or power of sale, depending on where you are. And basically, the lender takes over, and they don't care what price they offer it at. They just say get rid of it. Whoever, they usually use an agent, I guess, and they're willing to let it go at whatever price. And so that sets a new lower benchmark for the whole market, and then everybody else has to adjust to that. So that's probably the next step. I don't know why I would have thought it would have happened by now, but we're into the summer doldrums right now. Maybe in September when sales pick up a little bit more, we'll see that happening.
You said Edmonton and Calgary are the exception. What's happening there?
Well, sales are up in Edmonton and Calgary, and prices are up. From a much lower base than Vancouver and Toronto. I mean, it's like apples and oranges almost, the difference. But there's a lot of activity in Edmonton, Calgary. People are moving to Alberta still, and the prices are up a little bit, and the volume is up about 10% in each center, according to reports I've heard. However, the people that are expecting it to go like Vancouver and Toronto will be disappointed, because the thing about Edmonton and Calgary is there's lots of land, and there's lots of builders, and there's lots of real estate developers that own lots of land on the outskirts of the cities, and the traffic jams are not that bad in either city. People that come from Toronto or Vancouver think the traffic is a breeze. Seems, I live in Edmonton, it seems like the traffic is quite onerous, but apparently not compared to other big centers. And so they're willing to put up with traffic, and they can buy reasonable priced houses out in the outskirts, and they're building more and more. I mean, it's just unbelievable, the building that's going out. So in every cycle, we haven't had a cycle for a long time, but in every cycle they overbuild at some point, and then the prices soften and bargains appear. But we're not at that stage yet.
I remember the president of the Calgary Real Estate Association telling me the only thing stopping the growth of Calgary is Regina to the east, the U.S. border to the south, the Rocky Mountains to the west, and Edmonton to the north.
Yeah, that's about it. And, now with work from home, I mean, it's like, and the next thing is, Tesla's started their robo-taxi in June, I think, in Texas. And they're planning to expand it rapidly. So if you can commute and you don't have to be sitting behind the steering wheel, you can catch up on your emails and stuff while you're commuting. You can commute from Red Deer to Calgary or anywhere. So it's those flexibilities that are coming with work from home, and also maybe with self-driving vehicles, will change the real estate market dramatically in ways that we can't even imagine right now.
I know one of the ideas is that you might own a self-driving vehicle. You drive yourself to wherever you go, and then it just wanders around picking up people during the day until you need it again.
Yeah, exactly. Well, like right now, my Tesla, I can summon it in the parking lot. It can come like from, say, 200 meters away or 300 meters away, I guess. I don't know. I haven't tested how far it could come from, but it can come from quite a ways away, and it'll come to you. The next step is to dial in an address into it, and then it'll follow that thing. And it's, I do it now under fully self-driving, but I have to be in the car. And not only do I have to be in the car, but there's a camera above the rear view mirror. And if my eyes aren't watching the road, it'll shut itself down. So that's the last step, is to remove that need for a driver to be sitting there, to be like a monitor to make sure nothing goes wrong. I don't know. I don't have the latest technology. Mine is 2021, and the new ones, of course, have got better cameras and better software. But if I judge it on mine alone, I would say it's not ready yet. But they are starting the test in, I think, in Austin, Texas. It's been going for a couple of weeks now, so we'll see if it works out. But if it does, or when it does, I guess eventually it will, then you could rent your car out part-time, make a bunch of money off it.
Yeah. Now, talking to people who have experienced the robo-taxis and so on in the U.S., they don't speed. They stop at stop signs and red lights. They don't drive impaired, but they can't recognize emergency vehicle lights, so they don't pull over, and they run over forest fire or firefighting hoses. And they also don't recognize policemen trying to direct traffic.
Yeah, I talked to an engineer his company was hired to do a study of because the Waymo ones have been around in California for quite a long time. I think more than 10 years now, and they follow this thing around. And it has way more equipment on it. It's got radar, of two different versions of radar and
LiDAR. Yeah,
LiDAR and the thing is that people, sometimes it makes more sense for a car to go ahead. Like they say, the other car will say, to you, go ahead, and it's your, even though it's not your turn, you go ahead because it makes more sense. Well, people get really upset because the automatic robo car won't respond properly to those suggestions or those instructions, and they get really upset, apparently, according to this engineer I talked to. So I mean, but people would probably get used to it eventually, but they do have to fix. That's one thing I know. It's like when it goes through a construction zone, and I'm on fully self-driving, it doesn't recognize the speed limits properly, and I worry about that because that's kind of dangerous. If you got a construction situation or an emergency vehicle, as you say, the car has to slow down. There's nobody in there to take over, so I usually take over and slow right down. But there's nobody in the car to take over. It could just zip through a construction zone or through a traffic accident site, and that would be terrible.
So far, how is the summer looking for Canadian home sales, inventory, and pricing, especially in the Greater Toronto and Metro Vancouver areas?
There's really no sign of a recovery. The prices have not come down a huge amount yet, in my opinion. A lot of, if somebody bought in 2021, 2022, they'd probably argue with that statement because they're looking at a 30% loss. But from the size of the bubble that we have, the current reduction in prices is not sufficient to erase the bubble. And my thesis is that all bubbles burst completely eventually. In other words, they have to completely erase the full extreme of the excesses of the bubble. And that would require about another 20% or so before we got to that level, if not more. So we're not anywhere near that, but we don't know. Like right now, it's a pause. There's a huge amount of inventory, more inventory piling up every day, and sales are just really very, very slow. And so one of the big things is realtors. Realtors are making no money, and one of the biggest segment in the population of people speculating on real estate are actually realtors themselves. So they buy extra houses and try and rent them out or flip them or whatever on their own because they're watching the market all the time, and they tend to think that they know better than other people as to when to buy and when to sell. And maybe they do in a rising market, but when the market stalls like this, they're stuck with some excess inventory that they can't get rid of themselves personally, and on top of the overall situation. So there's a lot of people, and there must be more sellers that have not listed their house, because if you've got 4 houses on your little credit for sale, you don't want to, even though you want to list your house, you're going to wait till at least 1 or 2 of them sell before you list. So it's I suspect it's going to take a long time, but other people say maybe the bottom's close, but there's no sign of it being a bottom. And the one thing I'm watching for is to repeat what I said a minute ago. The lenders, the banks primarily, but other lenders too. The shadow bank lenders, and there was a lot of that at the top of the bubble. Those guys take over and they force the sale, and that's when you see the prices come down. So because we haven't seen that yet, and because we haven't seen enough of a price drop yet, I don't think this summer will be the bottom. There'll be more coming eventually. Now we don't know what the economy is going to do, so that's the other part of the equation.
Do you think home sales agents size people up to see if they're likely to put in a higher offer if they believe there are competing buyers interested in the home?
I don't know. I think at this point, I've never been a realtor, but I'm guessing at this point they're so desperate for a sale they just try really hard to get the people to put in something that would trigger a sale. And the problem is they can't talk the buyers into coming up to the listing prices. That's basically where we're at now. They would if they could. I mean, they'd love to get a sale because the commissions are really, really, very slim right now. But they can't. And they also probably phone the selling lister, and try and get that person to bring the price down, say, well, I've got a buyer, but, you have to come down, and what are you going to do? And so the two realtors talk to their people, and both the people dig their heels in, and then nothing happens. That's about where we're at right now.
What's the latest on mortgage rates and bank lending?
So I haven't seen the latest numbers on bank lending. I keep thinking that there's going to be a big slowdown in lending, which is serious for the economy, obviously, because the banks create the activity to a large degree. In addition to the government spending more than what it takes in taxes, the banks create money when they lend to people, and if they stop lending, then the money creation process stops, and then you've got serious problems in the economy. But I haven't seen any signs of a serious slowdown in bank lending, and mortgage rates are staying pretty stuck at relatively high levels. Inflation has come down, but the Bank of Canada is watching the Federal Reserve. The Federal Reserve is watching the tariff situation. The tariff situation is so unstable, and we don't know what the tariff ban's going to do next. And just last night, on Thursday night, he put on a 35% tariff on the biggest trading partner, Canada, that the U.S. has. But we don't know if it's going to. It's August 1st. So we got 19 days to go, and in the past he's changed his mind at the last minute, so nobody knows. But if those kind of tariffs do actually go into effect, there'll be higher inflation, but there also will be a recession, because a lot of businesses will be unable to to find buyers for their products if they have to tack on that big a tariff. So we're looking at higher inflation. We're looking at a recession. The central banks don't know what to do. So the mortgage rates have basically stayed relatively flat. The direction should probably be coming down. And maybe there are some chances to negotiate a bit. But there hasn't been a big drop in rates yet, and until the Bank of Canada cuts the rates substantially, then there probably won't be. I don't think the Bank of Canada is going to cut rates until the U.S. Federal Reserve cuts rates. They wouldn't want to get way out and ahead of the U.S. I don't think.
Is Canada already in a recession?
Well, parts of Canada probably are. The thing about Canada is so varied. Like we talked a minute ago about Ontario and Toronto and Vancouver real estate. The slowdown in building in Ontario alone, especially in Toronto, but also in the other smaller centers, would probably create a recession there just by itself, because real estate is 10 to 15, depending on how you measure it, or higher, maybe even 20% of the economy. So if you get a 50% slowdown in construction on real estate, you're going to have a recession, and that's basically what they're looking at. They were building a huge amount of units in Ontario, and now they've basically everything's stalled because they can't sell the inventory. There's lots of new condos and townhomes and houses sitting on the market in Ontario, so the builders are going to stop building, and the same in Vancouver. So I was in Vancouver recently, and I was walking around downtown because I was at a conference downtown, and there's so many buildings that have for rent signs out. I've never seen that before. Usually it always says no vacancy, and now they're talking about 1 month free rent, and they've got studio, 1 bedroom, 2 bedrooms available to rent. I've never seen it before in decades. I've never seen that. So that tells you if there's bargains to be had in the rental market, probably people won't be that they won't be in a hurry to buy anything. And that leads to a recession in those major centers. And if those two centers go into recession, even if Alberta still is not in a recession, there would be a recession if you take the overall. Now, there was a employment report on Friday morning, and it showed that there was a big jump in employment in Canada, but it was mostly all part-time employment, and also the problem at this time of the year is the seasonal adjustment factors are always difficult because of the summer employment for students. So the unemployment rate did go down from 7% to 6.9%, but that's still sort of close to recession levels. So to answer your question is we don't know. My guess is we probably already are in a recession still and have been for several months, but we won't get the official declaration of recession for a few more months. It takes quite a while for all the numbers to be calculated.
The S&P 500, along with the Nasdaq, have hit new highs this month. We've heard a prediction of 65,000 for the Dow. Where do you think the stock markets are headed?
Well, so what's happened in the last 5 years is the S&P 500 has basically doubled. Toronto market's up 70%, and the broad market in the U.S. called the Russell 2000 is also up about the same amount. So it's primarily the Nasdaq stocks and the big growth stocks in the S&P 500 that have done extremely well.
The TSX Composite Index has hit new all-time highs again this month. Are we likely to continue to see new highs in the TSX?
Well, the TSX is made up primarily of the large cap stocks, basically the banks are the biggest segment, and then the big oil companies and the pipeline companies. And so it'll depend on, in the banking sector, it'll depend on things like loans to developers, real estate developers, home builders, and especially loans to people taking out new mortgages and renewing mortgages. And with the downturn in the housing market, I would think that that's going to be a headwind, a big headwind for the banking sector. So it's going to be hard for the TSX to keep going up. It's up about 70% in the last 5 years. It's lagged behind the U.S. market by quite a wide margin, although it did hit a new high recently. The The other side of the TSX, but it's a small percentage of the small weight in the index, are the mining stocks, and they could really add a lot of zip to the sector if some of the things that are happening in the materials demand for materials worldwide were to heat up. But the problem with that is it takes a long time to develop a new mine and to get the financing in place, and the permitting is just ridiculously difficult in Canada. So we don't know yet if that's it's not big enough to make a difference now, but a year or two from now it could very well, especially in the gold sector and the copper sector. Those two sectors could really take off. But of course, the tariff ban in the U.S. just put a huge tariff on copper, 50%. So that would mean that Canada couldn't sell their copper into the U.S., which would make it very difficult for Canada. Most of the copper in the world comes from Chile and other parts of the developing world. And there's not that much in Canada and the U.S. domestically produced, partly because it's really hard to get a new mine approved in Canada and the U.S. But that could change. I mean, certainly the government in Canada, the Ottawa government and the provincial governments are talking about speeding things up to, I think, 2 years permitting. But even 2 years would take, a minimum of 5 to 7 years to build a mine. But prior to today, it's been more like 10 to 15 years to build a mine. So that's not going to rescue the TSX. The other thing is the oil and gas, and the problem with oil and gas is the demand for oil and gas is peaked and starting to slip now, and the only customer that Canadian oil and gas companies have primarily is the U.S. There's a little bit going through the Trans Mountain Pipeline to Vancouver, but other than that, it's mostly into the U.S. And the U.S. is becoming more and more difficult to deal with, as they are now by far the biggest oil producer in the world at 13 million barrels a day. So it's going to be difficult for Canada to see new highs in the stock market in Canada, except in niche sectors like maybe the mining and materials market.
Yeah, the TSX Venture Exchange continues to move higher, though nowhere near its all-time high of nearly 3,400 in May of 2007. Could this be the time for junior stocks to shine?
So the speculators used to love junior mining stocks, and Vancouver Stock Exchange was the world center for, there was a brokerage firm in Vancouver that had an office in London, England, and they would talk to all kinds of doctors and dentists from all over Europe, and they would speculate on Vancouver mining stocks, and it was a really good operation. And now I don't know if that would come back or not, but it could come back, and gold and silver would be the catalyst for that. So it could be the time for junior stocks to shine for sure. And I think it would be led by gold and silver stocks. But remember, there's one thing about the junior mining. It's been so long since there's been any kind of a surge in the mining stocks generally, and especially in the juniors, that when the stock prices do come up in those companies, which is happening now, of course, what they do is they issue a whole bunch of new shares in their companies. So they throw, people in the industry call it throwing paper at the market. So they just issue all these certificates and sell them into the market because they're just desperate for money, right? And the owners of the companies have been sitting for 10 years with no profits. And so they'd love to get some money back out of the stock market. So that when you invest in the juniors, look really, really good, and and all of a sudden you're hit with a doubling or tripling in the number of shares outstanding, and it's called dilution, right? And that's the negative in Vancouver Stock Exchange. But if it gets hot enough in the gold, and I'm kind of inclined to think that way, it might happen in spite of some of those potential problems.
Does it look like gold could have put in a temporary top?
Well, it had a huge run. Basically, you go back a few years, it's gone from $1,000 to $3,400. I think is the top that we're talking about now. It's trading around $3,300, and it's been consolidating in this area for quite a while. I don't know how many months now, but it seems like quite a while. And the gold stocks that we own, we've got several. have done really well recently. It took a long time for them to respond to the higher gold price, but they finally responded. And now the gold price is stalled out. And it could be a temporary top. But I think with the problems with the U.S. dollar, I'm not in the camp people think the U.S. dollar is going to be removed as the global currency. Or the global safe haven currency anytime soon. But people are looking at the U.S. dollar with less enthusiasm than they used to. And so gold maybe is going to look relatively better. But again, there's always, I always look at what could go wrong with these stories. And the one thing that has been a headwind for gold for a long time is the crypto field. And the leaders in the U.S., including the President Trump, have been running their own cryptocurrency scams. Well, should I use that word? Well, I think it is a scam, and promoting the crypto market. And the fellow that used to be the head of the regulator of the commodities exchange got fired, and they put in a guy who's very friendly to the crypto market. So that is a headwind for gold and for all the things we've been talking about, the Vancouver Exchange and the gold speculations, because a lot of the younger people probably are more interested in crypto speculation than they are in gold speculation. But being a long time market participant myself, I prefer the gold, and I wonder if there's no way to know if gold is going to come back in a big way. If it's going to come back in a big way, it's going to go a lot further up. But there's a lot of possible reasons why that might not happen, crypto being one of the biggest ones.
There's a federal by-election underway in Alberta in the riding of Battle River Crowfoot. Prime Minister Carney and Conservative candidate Pierre Poilievre in Alberta dressed up like cowboys. Funny to watch at the Calgary Stampede. Do you think the push for Alberta independence could be derailed if Poilievre wins that seat?
Well, it's certainly going to make it tough for the push for Alberta independence, which is a minority. Some people are arguing whether it's like 10% of Albertans or whether it's 30% of Albertans, but it's certainly not 50% of Albertans. It's going to be difficult for him if he gets elected in Alberta, because he's going to have to deal with those people, and those are, he's probably going to win the by-election, but that is sort of part of his base, as Pierre Poilievre I'm talking about, and it's difficult for him to talk to that base and then try and win the leadership of the Conservatives nationally and also win the next election. So he's in a very difficult spot, and I don't think it's going to be easy for him to change the trajectory of the Alberta independence movement. The Premier, I think, seems to want to do a referendum, and nothing Poilievre can do about that, whether he's an MP from Alberta or not. If that goes ahead, then we'll find out what happens. But it is interesting, and that whole thing with the U.S. president suggesting that Canada should become the 51st state. There are more people in Alberta that are looking at that positively than anywhere else in Canada, I would guess, and so that is another factor that would possibly come into the referendum when they decide. Because, of course, if Alberta did become independent, they very quickly would probably become part of the U.S., given that it's impossible to stand alone as a landlocked province with no access to the ocean and that sort of thing. Alberta would need to make friends really quickly. Of course, the U.S. would love to get a foothold into Canada if they really want to make Canada the 51st state. So, I don't know. That's going to be a very difficult thing. But it'll be fun to watch the by-election. I don't know. It'll be interesting. It's entertaining. Finally, it seems like politics in Canada is entertaining again. Right? For a long time, it wasn't.
We're trying to figure out if the feud between President Trump and Elon Musk is real or not. If this feud continues, could it affect the markets?
Well, for sure. I mean, it's a big deal, and I do think it's real. I don't know if Elon Musk. I was just, I followed Elon Musk for a long time, and his mother's from Regina, Saskatchewan. I was born in Moose Jaw, Saskatchewan. The connection to Canada is quite strong, actually, and obviously Elon Musk is a fascinating character. I was very puzzled when he decided to get involved with the election and put a bunch of money into it and get. And the track record of people that have gotten close to Donald Trump is 100% of them get damaged in some way sooner or later. And this one, of course, was not very long in the making. I don't think it was. I don't even know if it lasted a full year, the bromance between the two. So, and now the new announcement that he's starting the America Party, a third party. Politics in the U.S. is extremely difficult to get established, but if anybody could do it, it's probably Elon Musk could. But for sure, it could affect the markets. One of the things that Elon Musk is highlighting as part of this this political move with the new America Party is the deficit is running out of control and the debt is too high. And of course, that's not quite true. He's exaggerating the problem, but it probably will resonate with a lot of people. But in the end, it'll come down to how do they feel about their personal financial situation. What is the cost of groceries? What is the cost of a new vehicle? What's the cost of the stuff they buy on Amazon? And with the tariff man going crazy, it's likely that they're going to be paying a lot more. For instance, the ICE agents arresting all of the undocumented immigrants are going to push the cost of produce, produced in California, and all kinds of services that immigrants do for probably wages that are lower than they should be are going to become much more expensive. So that could come into the midterm. Like the midterm elections are in November, a year from now. So a year and 3 months from now, and that's the battle will continue on there. But you wonder if this detour into politics is a cover-up for Elon Musk's issues with Tesla, because the numbers that are coming out from Tesla are that the sales are slowing. The BYD, the Chinese vehicle company, is surpassing Tesla in not so much in developed markets, not in the U.S. at all, because there's no BYD in the U.S. yet, but in other places like Brazil and other parts of the world, BYD is really far ahead. And in China, of course, BYD China is the biggest car market in the world. BYD is very strong, and Tesla's struggling. So it could be a distraction for Elon Musk. He's also got problems with SpaceX because his rockets keep blowing up, and he also wants approval for this robot car that we've been talking about earlier, and that is going to be difficult if one of those robot cars runs over somebody or runs into some emergency vehicle and accidents. There'll be problems getting the approvals. So now, does that directly affect the stock market? I don't know, but I think the bigger thing in the stock market is AI. And AI is definitely something that Elon Musk is interested in. He's got Grok, which is competing with ChatGPT as the two leading AI offerings. I don't know if you can buy either one of them directly on the stock market. I don't think you can. Grok is, I believe, not sure, but I think Grok is part of X. I'm not sure. So, but X is not publicly traded yet either. So, the stock market is more likely to be affected by what happens with AI than with what happens between Trump and Musk, I would think.
Julian Assange said when all is exposed, 98% of Washington will fall, both Democrats and Republicans. Do you think Elon Musk forming the America Party was a good idea, and could it affect the 2026 midterm elections?
Yeah, for sure. I did a very quick research in the, the one that, I don't know if people remember this because it was in the 1980s, but there was a third party, Ross Perot was the guy's name, and I think he got between 10 and 20% of the vote, which is pretty substantial. And basically what he did was he helped Clinton in 1992 defeat George H.W. Bush Sr. So Bush Sr. Followed Ronald Reagan. He'd been his vice president, and he only got one term. Usually they get two terms, but he got defeated by Clinton when he was trying to get his second term. And probably you could credit the third party run by Ross Perot taking the votes away from the Republicans. So in this case, the midterm elections is what Musk will target with his America Party, and he could definitely hurt. He could draw votes though from both sides. So I'm not quite sure. I suspect he'd probably, given that he got hooked up with Trump and the Republicans in the last election, I would suspect he's more likely to pull votes from the Republican Party. But he's got a big platform. Musk has got X, and X is pretty huge. He's got 200 million followers on X or something himself personally. He's also, a lot of people are doing their searches on Grok, which is the AI engine in X, and Grok is, when you ask it questions, it answers taking Elon Musk's posts into consideration. Right? So he can influence a lot of things. So if the midterm elections are disruptive, it would be that the Republicans would lose this very slim majority they have in the House of Representatives. And less likely is the Senate to swing to the Democrats, because they don't all stand for re-election every 2 years, but only a third of them do. But the House of Representatives is 100% of them are up for re-election in about 15 months. So they could definitely affect the midterm elections. Probably will affect it, and I don't know which way it'll cause things to go. But it certainly, I doubt that all will ever be exposed. So to get back to what Julian Assange said, all will never be exposed. And if it were exposed, probably people wouldn't believe it anyway. So,
The future of Tesla and SpaceX, would it be fair to say it's not a smart idea to bet against Elon Musk?
Well, you can't bet against Elon Musk on SpaceX because, actually you can. You can buy, it's a private company, but you can buy units in it. It's difficult to buy them, but you can. And they've gone way, way up, basically sixfold in the last 5 or 10 years on the private market. Tesla itself is run up above $400 a couple of times. And I would think that you can bet against Elon Musk in the short term. In the long run, I suspect he'll be successful. But right now, to me, from what I just said a minute ago, he seems to be in a distraction mode right now, and that is not a good sign for his companies, the publicly traded one, Tesla especially, could be hurt by that. So he's got to come up with some kind of a version of competition for the wave of electric vehicles that are coming out of China, and that's going to be extremely difficult. There's about about 80 million vehicles sold per year in the world, new vehicles, and China has last year they had about 40% of that, and I think this year they're going to have 50%. It's absolutely phenomenal. And most of those Chinese vehicles in China that are sold are electric. They're either plug-in electric or when I shouldn't say most, about half of them are electric. And but by 2035 they expect them to all be electric. But the other big thing is they're also exporting them all over the world as well. So Musk has got to come up with something with Tesla to compete with that, because those cars are pretty. Everything, I haven't personally experienced it, but there's lots of podcasts you can go on. Driving with Dunn is one really good one, and he's a former General Motors executive that's extremely good, and he says that these cars are excellent. They're cheaper than what we make in North America, and they're better than what we make. So they're better quality. So the image that China's making less than great quality products is an ancient one, and it's going to be replaced by people might want the Chinese quality above Detroit quality, and that may be difficult for Tesla to line themselves up with the high quality version. The Tesla cars coming out of Shanghai, the Shanghai factory, they have one factory in China. The build quality is excellent. I know that personally because we have one in our family, and it's way better than the one I bought from the American-made one from Tesla in 2021. And so what they're doing in China is pretty impressive. But yeah, I mean, you can vote, you can bet against Musk. It's a gamble. You better be careful. You have to be ready to reverse it if it looks like he's going to be successful. But yeah, I imagine more people will be hurt betting against him than betting with him.
President Trump's tariffs are causing global trade to slow. Meanwhile, manufacturing in the U.S. is picking up. How could markets be affected moving forward?
Well, the manufacturing pickup in the U.S. is pretty slim, and a lot of it's probably due to the legislation that Biden put in to encourage these huge tax breaks and things like incentives to build renewable energy things, which was well underway, and now Trump is starting to cancel a lot of that. But some of the factories that are being built, there was a CHIPS Act and there was the IRA Act, and both of them caused a lot of investment to go into the U.S. But there's no way that the tariffs by themselves are going to cause a lot of manufacturing investment into the U.S. because nobody knows. Like, if you're going to build a factory, it's going to take 2 or 3 years to build it, and then you got to try and guess what the tariff regime is going to be 5 years from now. We don't even know what the tariff regime is going to be 11 days from now, and what is it, 19 days from now when August 1st comes around. So how can you build a factory based on that? It's impossible. So if he was going to do this tariff thing to bring manufacturing back to the U.S., he should have done it in a much more steady and slow and permanent way, and it's not happening. So the reality is that the U.S. and Canada are both way behind China in a lot of manufacturing areas. The whole world has actually fallen behind China, and that's the biggest issue. And tariffs alone won't fix that.
The Chinese are grabbing the lead in auto manufacturing. Could some traditional automakers and some Chinese automakers end up going out of business?
Both, all of the above. So there's way too many Chinese automakers. I think people know they have a tendency to be hyper competitive, and every little state in China, they're not that little because they got lots of population. Even small cities are over 1 million people. They are independently encouraging companies to be formed, and they give them all kinds of help in forming a company, and they like manufacturing. It's like what they like doing. And so car manufacturing makes a lot of sense to all these places. That's kind of like an industrial strategy, if you like. And we don't do that in North America anymore because we gave up on picking winners and losers long ago. But the Chinese are well into that, and they encourage these companies. There's hundreds of companies making vehicles now in China, and most of them are going to go bankrupt. And the big ones, the successful ones like BYD, and there's a few others, but I'm not sure about all of them. So the only one I'll mention is BYD. BYD is going to be successful because they've moved out of China into other countries, and I think that will help them survive whatever the fallout is in China when the big shakeout comes. But it's probably starting quite soon. The next recession will probably be felt in the car manufacturing business all over the world. And several of the Chinese companies will go bankrupt, but also some of the incumbent European and North American companies will go bankrupt too, because it's just way too brutally competitive. And the prices in Europe in manufacturing and in North America manufacturing are much too high when you look at the prices coming out of China.
Looking at the U.S. and then the rest of the world, is the electric vehicle market gaining momentum or stalling?
So I just mentioned a minute ago, the Chinese is the biggest, China's the biggest vehicle sales area in the world. And last year, 40% of the vehicles were EVs, and this year it looks like 50% will be EVs. So it's definitely gaining momentum. Even in North America, where the EV sales are less than 10% of total sales, the numbers are going up, but they're going up quite slowly. But they are going up. There are some offerings, some new offerings coming out from some of the incumbents, and maybe better than what came out. The Tesla was really the one that, you go out to Vancouver, every third car is a Tesla, right? So, but I was just there. I mentioned and saw that. But they need better. The incumbents need better electric car offerings to make it work. But in any case, it's gaining momentum. It's sort of hit a point where it's not growing as fast in North America. It never really grew that fast in North America, but in China, it's going way ahead. I wouldn't be surprised to see by 2035, 10 years from now, if all the new vehicles sold in China are electric in some form or another.
For 2025, Mercedes-Benz has an electric version of the G-Wagon. Would you trade your Tesla for one of those?
I wouldn't, but it looks really interesting. Like a G-Wagon is kind of a prestigious vehicle, and but it's like $250,000 or something ridiculous amount like that. So, and of course, it's never going to be as fast as the Plaid version of the Tesla that I have, but yeah, they'll sell a few of those, I'm sure. But the only one I've seen so far is actually another Tesla vehicle, and it's the new Model Y that's been refurbished. Just came out in the last couple of months, and we're starting to see some of them on the roads. And that's a really sharp-looking car, and it's a little bit bigger. So it's I guess a hatchback kind of looking sedan. And those things look really, really cool. But for now, I'm going to stick with my 4-year-old Tesla. Let's see what happens. There's going to be lots of new electric cars coming out, so there'll be lots of choice.
Where can people follow you, and where can they buy your book?
So you can follow me on X, HMACBE, and also on some of the other social media sites, Blue Sky, for example. And you can buy the book anywhere the best bookstores are available, or online through Amazon, and or they contact me directly as well. So there's lots of ways to get a hold of my book.
Hilliard, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBeth.Partners.com. You can find him on X at HMacBE. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Eric Hadik, Mark Leibovit, and Hilliard MacBeth. And thank you for listening. If you have any questions for the show or for any of our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen.